Profit. The most favorite word of every businessman. Every activity, every decision, every step taken by a businessman is for earning more and more profit. But there are some organizations of which the objective is not to earn the profit but to give the service, to promote the objective for which it is formed. Such kind of organizations are called as NPO, non-profit making organizations or concerns. Now we are going to revise the final account or the accounting system for NPO. But the first question comes, why the accounting? If profit is not the motive, then what is the requirement of accounting? Answer is, the accounting is required because even though the objective is not to earn the profit, but maybe at the end the organization will earn the profit, and there are the tax related issues also. So the topic gives us an idea about accounting for NPO. Let's revise the NPO. Thus, NPO has got its own special features. Let's see that. NPO, the meaning and features. It is an organization formed to give services. Objective is not to earn the profit. Profit is not the main objective. It can be the result, but it is not an objective. Income, it is used to promote the main objective. For example, if it's a sports club, then it is expected that whatever income you are gaining must be used for the sports activities only. Main source of cash, from where the cash inflow is there. It is from donations received, subscriptions, government grants, membership fees, entrance fees received, etc. So such kind of things are the income sources or cash sources. There is no trading activity by the NPOs. If the trading activities are there, these are minor or very subsidiary. Dividend. Every company gives dividend to its shareholders and members, but in case of NPOs, the dividend is not paid to members because the objective of coming together is not to gain something from it, just to promote the objective. So no dividend is paid. Management. It's a democratic management and which is run by all the members. So there is no owner, all the members are actually contributing to the management. Capital fund. As we know, to start the business we need capital. A sole trader brings the cash from his own sources. A public limited company gets the amount from public. But in case of NPOs, the capital fund is created from surplus, entrance fees, donations, etc. Such kind of NPOs generally starts with donation and every year's profit gets added to it. So that's a capital fund. Special funds. The special funds are created from the donations received from public and it is actually utilized for the purposes for which the funds are created. For example, if the fund is created for building, then it must be utilized for building construction only. So you cannot utilize the special funds for general purposes. That is also an important thing. Final account. As the accounting is to be done, we are always interested in final account. So yes, in case of NPO also, final account is prepared. What are the contents of final account? As we know, there are generally receipt and the trading account, P&L account and balance sheet for a normal firm. In case of NPO, let's see what is the final account content. First is RP account, receipt and payment account, which is equal to cash account. We are going to discuss the format, but it's a cash account called as RP, receipt and payment account. Second, our favorite P&L account, here it is called as income and expenditure account. It will help us to find out the profit or loss, which is actually called in this case as surplus or deficit. And of course the balance sheet to understand what exactly the asset and liability position is there of the NPO. So RP, receipt and payment account, i.e. income and expenditure account and balance sheet. Now, what is the exact difference between receipt and payment account and income and expenditure account? RP means receipt and payment, IE means income and expenditure. If you understand this difference perfectly, you can solve any question in the world. So, focus on this now. Why it is prepared? What is the objective of preparing the account? RP account gives you closing cash and bank balance at the end. How much cash the NPO possesses. While IE account gives you the surplus or deficit, that is net profit or net loss in our general terms, surplus or deficit. Next point, it records what? RP account records revenue and capital items both. That means if any loan is taken, it's a capital item, it is not day-to-day item, it is also recorded in the receipt side. If fees is received, it is a revenue item, it is also recorded in the receipt side. While IE account records revenue items only. That means it will never record loan taken, or fixed asset purchase revenue, day-to-day activities are recorded by IE account. Next comes records items related with what? RP records record the items related with any financial year. For example, if a member comes and he says, I am going to pay the membership fees for 5 years, so RP will record it for 5 years, but income expenditure account will record the membership fees of current year only, that is 1 year. 4 years amount will be recorded in the liability side, it is not current year's income. So RP records the item related with any financial year, but IE records related with current financial year only. That's the difference. Next point comes debit side. RP account records all the receipts on the debit side because it's a cash account, real account. Real account's rule is debit what comes in. RP account debit side records receipt. Income and expenditure account is a nominal account. Credit all incomes and gains, debit all expenses and losses. On the debit side of IE account, you will find all the expenses and losses if any. So debit side of RP, receipts, IE, expenses and losses. Credit side, RP account, cash account, credit what goes out, so all the payments. IE account, incomes only. So RP account credit side records payments, IE credit records incomes, nominal account credit all incomes and gains. Of course, we are going to see it again in the format in detail. Accounting system followed. As we know, there are two types of accounting system. Cash system of accounting records actual receipts and payments. It is nowhere concerned with current year's connection, but there is second system called as mercantile system, which records expenses and income of current year only. So RP accounts follows cash system of accounting, while IE account follows mercantile system of accounting. For example, if I paid salary of 10,000 and 2,000 is yet to be paid for current year, RP account will record 10,000 only, IE account will record 10,000 paid plus 2,000 payable, 12,000. Mercantile system or accrual system of accounting. So after going through the distinguish between these two, let's see what is the format of RP account and IE account. This is the format of RP account. Debit side indicates receipts, credit side indicates payments. It starts with the opening balance of cash and bank. Then all the actual receipts are debited, that is subscription received, entrance fees received, loan amount received, assets sold, etc. While on the credit side, all the payments are recorded, actual payment, salary paid, maintenance expense paid, assets purchased, loan repaid, etc. And finally the balance, closing balance is recorded. So receipt and payment account equal to cash account, it's an asset, so debit what comes in, credit what goes out, gives us the closing cash balance entry. Now income expenditure account, it's a nominal account, so debit all expenses and losses, credit all incomes and gains. It records all the expenses, that is paid plus outstanding, salary expense, maintenance expense, loss on sale of any asset, other expenses. While on the credit side, it records income, actual received plus receivable, subscription income, entrance fees related to current year, profit on sale of any asset, other incomes. If the incomes are more, let's say 10 lakh, and expenses are less, let's say 8 lakh, then income is more than expense, you will get surplus, that is net profit. On the other hand, if expenses are more, let's say 15 lakh, and incomes are less, say 10 lakh, then 5 lakh is a deficit, that is the loss. Of course, at the same time, both cannot come, either surplus or deficit, depending on the situation. So RP account gives us closing balance of cash and bank, IE account either surplus or deficit. So that's the basic difference between RP account and IE account. I repeat, if you understand it perfect, you can solve any question in this one. So, to understand it better, we are going to solve this question on paper so that you will exactly get what is the difference between RP account and IE account, and then we will go towards the board examination question. So the topic will be perfectly revised. So, what is given in this question? Let's analyze it in detail first. Let's solve a problem to understand the exact difference between RP and IE account. Details given by the trust for the first year. So there is no opening balance sheet, it's a first year. It started with a donation received rupees 1 lakh. Now there are two columns given, revenue, expenses and actual payments. Revenue, expense, actual payment. Mark the difference between these two words. Salary expense says 10,000. It means it should have been paid 10,000, but payment says till now only paid 9,000. So 1,000 is still payable. Is it asset or liability? Exactly, it's a liability. In case of rent, it was expected, revenue expenses, it was expected to be paid only 20,000. Till now we have paid 22,000. It means 2,000 paid extra. It is our asset. We'll go to the asset side, prepaid expense. Electricity was expected to be 10, paid 10, so nothing to worry about. Building is not a revenue expense, but you purchased 30,000. Other expenses were not expected to be paid, but still you have paid. It is again prepaid. Maybe it is related to the next year. Of course, we are going to analyze in detail when we will prepare the accounts. Some more information is given. Revenue incomes are given, and actual receipts also. Again, mark the words income versus receipts. Subscription says it should have been received 90,000, but till now we have received only 80,000. So 10,000 is still receivable. It is an asset. Entrance fees should have been received 40,000. You received 40,000. No, nothing to worry about. Other incomes should have been 30,000, but actually received 40. So you have received extra. It's a liability received in advance. Loan is not a revenue income. It's a capital received 50,000 and donation further received 80,000. We are expected to prepare the RP account and IE account and balance sheet from these details. If we can segregate these items in RP, IE and balance sheet properly, it must be tallied, and this is the best question to revise these two accounts perfectly. So focus on the solution and revise it properly. So let's solve this question to get the exact idea. What is the basic difference between RP account, IE account and balance sheet? So here we are going to prepare three accounts: RP account, receipt and payment account, IE account, income and expenditure account, and balance sheet. So let's start for this solution now. So starting with the first transaction, the transaction given is donation received by the trust of rupees 1 lakh. By giving the effect, you must remember that you have to complete two effects and then only you will move forward. Otherwise, it will not be tallied. So, donation received, journal entry, cash account debit to donation. Cash account means receipt and payment account, of which you cannot have any opening balance because it's a first year of the trust or the organization. So, receipt and payment account debit to donation received. The amount is 1 lakh. Debit what comes in. Now it is our capital fund, because with this we are starting our organization or non-profit making organization. So let's go to the balance sheet now. Under the capital fund, now we are going to start with donation. So donation received 1 lakh. So someone has given donation to us and then this trust has been started. So first effect cash account debit, second balance sheet liability side for donation received. Now the next statement given is about the revenue expenses and actual payments. So now revenue expenses means income and expenditure debit side. Why? Because let's go to the income and expenditure account. Let's go through the headings first. As you can see on the debit side shows expenses and losses. So revenue expenses are ought to come here and incomes will go on the credit side. While let's move towards the receipt and payment account now, in which the debit side indicates the receipt, that is the amount received will be debited in this account and the actual payments will be credited to this account. Now in the first statement they have given revenue expenses, so it will come to income and expenditure debit, and actual payments which will go to the receipt and payment account credit side. So let's go towards these two accounts, IE debit and RP credit. So let's start with the first transaction now. Salary 10,000 revenue expense. Expense means income and expenditure account debit side. So I will record it as to salary expense 10,000. It means it is expected that we have to pay salary of 10,000, but actual payment on the payment side is given only 9,000. So now let's move towards the receipt and payment account, where we will credit this item as salary paid 9,000 only. It means out of 10,000, only 9,000 is paid, 1,000 is still outstanding. It will go to the balance sheet liability side. It's a liability, so balance sheet liability side we have to record the outstanding salary. Let's go to the liability side. Outstanding salary amount is 1,000. So, salary expense, incurred expenditure debit, payment RP credit, difference liability side. What is the next item? Rent. Rent expense is given 20,000 and actual payment is 22,000. So, let's go to the incurred expenditure account first to record the expenses. To rent expense, it is 20,000. Expense is 20,000, but how much is actually paid? Let's go to the receipt and payment account credit side. By rent paid is 22,000. It means it was expected to pay 20,000, but you have paid 22,000. 2,000 extra paid. Anything paid in advance is our asset. So the difference 2,000 will go to the balance sheet asset side. Let's move towards balance sheet asset side now. And here I will write rent prepaid rupees 2,000. So paid in advance rent rupees 2,000. So that was second adjustment. First was outstanding, second was exactly opposite. Now electricity expenses were 10,000 and paid is also 10,000. So let's go to the incurred expenditure account debit again to record the electricity expenses. 10,000. Expense means it was to be paid. You have to pay 10,000 and how much actually paid is also 10,000. So while for recording the payment, let's go to the RP account credit side. So by electricity expense paid 10,000. Both are same, so you don't need to worry about it. It was payable 10 and paid also 10. Next adjustment is building purchase 30,000. Building is not a revenue expense. It's a capital expenditure. So it nothing to do with incurred expenditure account. We have to go to the balance sheet asset side. So let's record balance sheet asset side. Building 30,000. Now there is no adjustment of depreciation etc. So I have recorded on the outer column. So I have purchased a building, capital expenditure, asset side 30,000. Second effect, while purchasing the building, I have paid the cash. So payment, receipt and payment account, credit side, payment side, I will record by building purchased. Amount is 30,000. No difference in amount, so we don't need to think about anything else. So building purchased, asset side and RP. It's not a revenue expense, so it is not recorded in IE account. Next comes other expenses. Other expenses states that revenue expense was 0. So nothing was to be paid in this year. So nothing will go to IE account. But you have paid 30,000. So let's move towards payment first. So come to the receipt and payment account credit side and record by other expenses paid and the amount given is 30,000. Second effect, as it was not liable to be paid immediately but we have paid, means it is paid in advance. So let's go to the asset side because it is paid in advance. So other expenses prepaid 30,000. It was not current year's expense, so we have to make it 30,000 paid in advance. So this was all about the expense side and payment side we have completed. Now let's move towards the receipt side also. Now, as we can see in the question, revenue incomes and actual receipts are given. Again, revenue income means incurred expenditure credit. Actual receipt means receipt and payment account debit. So let's start for the posting. Subscription, revenue income 90,000. Income. So let's go to the income and expenditure account credit side. Here specifically given incomes and gains. So credit side by subscription income It means subscription was expected to be received 90,000, but actually received only 80,000. Received. So let's go to the receipt side of receipt and payment account, where we will record it to subscription received only 80,000. 90,000 was expected to be received, only 80,000 is received, 10,000 still receivable. Anything receivable is our asset. So asset, we have to go to the balance sheet now. Balance sheet asset side, we can record subscription receivable. It is 10,000. 90,000 was expected, 80,000 received, 10,000 still receivable. Second adjustment is entrance fees. 40,000 was receivable and 40,000 received. So let's move towards the income and expenditure account to record the entrance fees. Income side. So income side, by entrance fees income 40,000. So it was expected to receive 40,000 and actual receipt is also 40,000. So let's go towards receipt and payment account debit side to entrance fees received 40,000. Both were same, so there is nothing to worry about. No other adjustment is to be given. Now, after entrance fees, let's see the next item, other incomes, which was expected to be received 30,000 because income, revenue income is 30,000, but actually received is 40,000. So, let's go to the income and expenditure credit side, where we will record the income to be received by other incomes. Now, it was expected to be received only 30,000. But actually we have received 40,000. So received, that is receipt and payment account debit side. So let's go to the receipt and payment debit, where we will record to other income received 40,000. It was expected to receive 30 but received 40,000. What is this 10,000? Can you guess it? Exactly, it is received in advance. It is our liability. So second effect, we will go to the balance sheet liability side. Here on the liability side, I will record other incomes received in advance. Instead of 30 we have received 40, 10,000 is received in advance liability. This is the income of the next year. Next adjustment given is loan taken. Loan is not a revenue item. It is not taken every year. It's a capital receipt. So first thing, it will go to the balance sheet liability side because we have taken the loan. Journal entry is cash account debit to loan. So loan will be recorded in the liability side now. The first effect, loan taken. Amount of loan is 50,000. Because we are liable to pay it back afterwards. So it's a liability. Second effect, we have received the cash. So receipt, where it will go? Exactly, receipt and payment account debit side to loans taken. The amount is 50,000. Loan accepted. So that was a capital receipt. So nothing to do with income and expenditure account. Now the last adjustment is donation received. We have received donation from someone. Again received. Cash is coming in receipt side. So let's go to the receipt side again. To donation received. Someone has given us donation of 80,000. Now it will be again added in the capital fund. So let's go to the balance sheet liability side, where we have already added one donation to the capital fund. Again added donation received 80,000. First effect, cash account debit. Second effect, donation received. So added in capital fund. Now all the adjustments are over. This is right time to close all the accounts and get the balance sheet tally. Let's move towards it now. Now, what will be the step to wrap it up? The step 1 will be go to the receipt and payment account and find out the cash and bank closing balance. As we can see, the debit side is more than the credit side, that is receipts are more than payment. So the bank balance or cash balance is positive balance 2,89,000. So this is the balancing figure, debit minus credit. It will be recorded in the asset side as the cash and bank balance. So let's go towards the balance sheet to record this balance. As you can see, the balance of 2,89,000 is recorded, cash and bank balance. This is the net effect of the receipt and payment account. Now coming to the income and expenditure account. As you know, it's a nominal account. It will tell us how much profit or loss we have earned. Now on the income and expenditure account, income side is more than expense side. So it's a surplus, that is net profit is called as surplus here, 1,20,000. Just like capital, this will be added in the capital fund. So let's go towards the balance sheet now to add the capital fund with surplus. So on the liability side, donation plus donation. Now this surplus 1,20,000 is added. So net capital fund becomes 3 lakh. Last step, close the balance sheet. If all the effects are given perfectly, it must be tallied. So building, rent prepaid, other expense prepaid, subscription receivable, cash and bank just now we have recorded, capital fund on liability, outstanding salary, other incomes received in advance and loan taken. If you make the total, it is perfectly tallied. And if this question is asked in exams, 12 marks will be assured. So this question has helped us to find out the exact difference between receipt and payment account and the income and expenditure account. Receipt and payment account has given us cash and bank balance, while income and expenditure account has given us the surplus. RP account records receipts and payments, while IE account records incomes and expenses. Practice it hard so that your base will be clear, and now we are proceeding further towards the board examination question. So how was that? A perfect shot, right? It's very simple rule that if you understand the concept perfectly, you can get it tallied in very short time span. So understand what is RP account, what is IP account, give the posting perfectly and you will get it tallied. Now the base is perfect. Now let's move towards the board examination question. This is the question which was asked in March 2012 in board. Details given by Kalpana Hospital for the year ended 31st March 2010. Receipts and payment account for the year ended 31st March 2010 is as follows. It means RP account is readily available and we don't need to prepare it again. Now we have to go for IE and balance sheet only. So let's see what is given in the RP account now. On the debit side of receipt and payment account, you can see the opening balance of 6,000 followed by subscriptions received 1,17,500. Now these subscriptions are combination of 3 years, 2008-9 last year, 2009-10 current year and 10-11 received for the next year, received in advance. Of course, we'll deal with in detail. Then on the receipt side, we can find the donations received 55,000, capital receipt, life membership fees received, again a capital receipt, hospital receipts, revenue receipts are given. We'll go to the income side. Now on the credit side, we can see expenses for medicines 10,000, honorarium given, that is remunerations given to doctors 75,000, ambulance maintenance expense 44,000, hospital equipments, furniture purchase, these are one-time items, FD created is again one time, and the closing balance is 69,500. So this is all about the receipt and payment account which is given to us, receipts on debit, payments on credit. What else is given now? Let's go to the next adjustments. Now what is given? First is outstanding subscription of 2009 and 10 is 5,000. So last year's subscription. Hospital equipment and furnitures were purchased on 1/10/2009, depreciation 20%. See, the date is 1/10, October, November, December, January, February and March. It means we have to charge the depreciation for that period only. Thereafter, it comes to the next adjustment. Life membership fees is to be capitalized. It's a one-time receipt, so it is to be capitalized. Donation of building fund. Donation is for building fund only, so it is to be capitalized again. Outstanding salary for current year is given. It's a liability. On 1/4/2009, we had some balances. The balance where land was given 2,50,000, investments 50,000. Ambulance comes 1,02,500, bank loan was rupees 2 lakh and capital fund is given opening 2,16,000. In short, the adjustments are given related to current year as well as the opening balances are given, and what we are expected to ask is prepare the final account of the hospital. As we know, the final account basically include RP, IE and balance sheet. RP is already given, we have to just prepare IE and balance sheet and we have to secure our marks. So let's move towards this board examination question now. After discussing the question in which we have seen the receipt and payment account and the adjustments, now we are starting for the solution. As you know, the solution will include income and expenditure account and balance sheet, and now we will start from the posting of receipt and payment account. Remember, from receipt and payment account there will be a single effect to be given either in income and expenditure account or in the balance sheet, because first effect is already given in the receipt and payment account. Now let's start for the posting of receipt and payment account. As you can see, there is an opening balance of 6,000 in the receipt and payment account, which is the opening cash balance. It is already been recorded in the opening balance sheet, so we don't need to worry about it. Starting from the next item, the subscription received. There it is received, here it is income. So let's go to the income and expenditure account, credit side, by subscription. Here I will not record the amount immediately. I will go to the working note number 1, in which I will make the adjustment. So let's move towards the working note number 1. Subscription income of current year, in which received total 1,17,500 is already recorded. Still receivable for current year will be added if any. Receivable for last year, it was receivable for last year, but received in current year, it is not our current year's income, it will be reduced. Received in advance in current year, if anyone has paid it in advance, again it is not for current year, reduced. And in the liability side, received in advance of last year, it was received in last year, but it was advance at that time, it is applicable to current year, so added. So I repeat, in received, receivable of current year, add. Receivable of last year less, received in advance current year less, received in advance last year add, and you will get the income for current year. Till now we have got only one figure, total received. We will deal with this afterwards. So let's keep it aside and move forward for the next item given in receipt and payment account, which is donation received. First effect is RP debit, second effect liability side, capital fund will be added. So come to the capital fund liability side. Till now we don't know the fund, but I will add donation to it. It's a second effect. Donation received is rupees 55,000. So it is added in capital fund and we have kept it open. Donation received 55,000. Next is life membership fees received. There is something given in the question regarding life membership fees. It is given that it is to be capitalized and it is not to be recorded in the income and expenditure account. So whatever life membership fees we have received is capitalized. The receipt can be of revenue nature or capital nature. If it is capitalized, then it will go to the fund account and it is added to the fund. If it is revenue, it will go to the income and expenditure account credit side. But in the question it is given, it is to be capitalized. So let's come to the balance sheet liability side and come to the capital fund. Add the amount here, life membership fees is added. The amount of life membership fees is 25,000. Capitalized means added in capital. Okay, so that was the second effect of life membership fees, capitalized. Then it is given to hospital receipts, revenue receipts. It's a revenue income, so it will go to the income and expenditure account credit side. So come to the income and expenditure credit side by hospital revenue income. There is no adjustment, directly to the outer column. It is 1,50,000. Revenue, day-to-day income, OPD fees collection and medicines amount collected, whatever. So this was all about the receipt and payment debit side. Now moving towards the credit side. First adjustment is by medicines. Medicines is a revenue expense, income and expenditure account, debit side, expense side, debit all expenses and losses. To medicines, the amount of medicine is given to be 10,000, outer column, there is no adjustment. Next adjustment is honorarium to doctors, that is remuneration given 75,000 is a revenue expense, income and expenditure account. Honorarium to doctors. Amount is 75,000. Income and expenditure debit side. Next is ambulance maintenance. Even though ambulance is an asset, its maintenance is a day-to-day expense. So ambulance maintenance 44,000 again debited to income and expenditure account, to ambulance maintenance account. Outer column 44,000 as there is no adjustment to it. Next is buy hospital equipment. Now we have purchased equipment is a one-time expenditure, it is an asset. So let's go to the balance sheet asset side and here we will record equipments. We will see if there is any opening balance, add new purchase. New purchased amount is given to be 30,000, so it is added. We don't know what exactly opening balance is there, that we will find out afterwards. Then depreciation if any. So it is added in the cost of equipments. Next is furniture purchase, again the same asset purchase. So I will record it here in the asset side. Furniture opening balance I don't know. Right now add new purchase. So furniture newly purchased is 25,000. Maybe some depreciation adjustment will be there. So equipment added in equipment, furniture in furniture. Again the same heading FD created. So you have purchased a new asset, that is you have transferred the amount to FD, it is our asset. So fixed deposit. I don't know whether there is any opening balance, add new. So new deposit we have created is 1 lakh rupees. Shown by the receipt and payment account credit side. I repeat, we are posting the receipt and payment account credit side. Last item in the receipt and payment account credit side is buy balance carried down. RP account balance is nothing but your cash balance. So it is 69,500 asset side. Cash oblique bank balance. Outer column 69,500. So in this way we have completed the first step, that is we have given two effects of all the items of RP account. Now moving towards the adjustments. I repeat, you must give two effects of every adjustment. So let's see what is given in the adjustments now. First adjustment given is outstanding subscription for 2009-10 was 5,000. Now here the year is 2009-10. The year ending is 31st March 2010. It means for current year outstanding subscription is 5,000. So it is subscription will go to the working note number 1 where we have already recorded subscription. Receivable for current year add 5,000. So it is still receivable but it is our income. So first effect add because it is of current year. Receivable is an asset. Anything receivable is asset. So second effect we will go to the balance sheet asset side where I will record subscription receivable for current year, outer column 5,000. It is income of current year, so added in income, but it is not received, it is receivable, so recorded in the asset side. Hospital equipment and furniture to be depreciated at 20% per annum, but it were purchased on 1/10/2009. Year started on 1st April 2009, but purchased on 1/10/2009. That means after 6 months. So they have been used for 6 months only, and depreciation is at 20%. So half year's depreciation. But before that, we need to have the opening balances. So let's wait for this adjustment. We'll solve it afterwards. Third adjustment is life membership is to be capitalized, that we have already done. We have added it in capital fund. Donation is for building fund, so it is kept in the capital fund, or you can show it separately as building fund. Either ways it is same. Outstanding salary for current year is 7,500. So salary outstanding. So salary is our expense and outstanding is our liability. So let's go to the income and expenditure account first, in which we must have recorded salary. No, it is not there. It's a new item. So let's go to income and expenditure debit to outstanding salary. The whole amount is outstanding, but even though it is outstanding, it is our expense. So debit all expenses and losses, 7,500. Second effect will go to the liability side because it is to be paid, liable to pay. So come to the balance sheet liability side. Here we will record outstanding salary, amount rupees 7,500. So that was about outstanding salary. Now we got the opening balances on 1/4/2009, which is the second last adjustment. So let's see what is given. Land and building. Sorry, land is given 2,50,000. So let's go to the asset side. As there is no space, I'll just make a space for it. I will write it here. Land 2,50,000. Opening balance was there and nothing happened during the year, so it is recorded same 2,50,000. Investments are 50,000. Let's go to the adjustment. Sorry, asset side. Investments are 50,000. No change during the year, so closing is also same. Ambulance was of rupees 1,02,500. So there is no ambulance given, so I'll write it here. Ambulance. These are fixed asset, should come upwards ideally. 1,02,500. Then given bank loan of 2 lakh. Bank loan, liability side of course. Bank loan of 2 lakh. Nothing happened during the year. No new loan taken, no repayment. So as it is 2 lakh. And opening capital fund is ready-made given 2,16,000. So capital fund 2,16,000 is given. So what we did, we have gone through 6th adjustment. All the assets and liabilities which were given as opening are again recorded. And now moving forward towards the adjustment of depreciation, which was second. I repeat, the furniture and equipment to be depreciated at 20% per annum, but these were purchased in October, so half year. So let's go to the balance sheet asset side. So equipment opening was 0, new purchase, so less depreciation 20% per annum for 6 months. So that is 20%, half will be 10%. So 3,000 depreciation and outer column 27,000. Second, furniture also nothing was new, so less depreciation at 20% per annum for 6 months. So it will be 2,500. Outer column 22,500. Depreciation, as you know, it's a reduction in the value of asset. It is our non-cash expense. So second effect will go to income and expenditure account, debit side, to depreciation. Underline. First was equipment. Amount of equipment depreciation was 3,000. Second was furniture. 2,500, outer column 5,500. So first depreciation of assets, first effect less from assets, second the income and expenditure account debit side. Now moving towards the adjustment, if any, first done, second done, third, fourth, fifth, sixth, seventh. All the adjustments are over. Now it's the right time to close the account, but before that, one adjustment is left, that is subscription. Why it is left? Something is given in the receipt and payment account. Let's see what is given in RP account. As you can see in the RP account, the total amount is given 1,17,500, which includes 7,500 for last year. So it is not for current year. It was receivable for last year, and 15,000 is receivable for the next year. So we have to reduce these two figures. Both are not related to current year. So let's go to the working note of subscription. Here, first 7,500 is received for last year. So it was receivable of last year. It is not for current year. So 7,500 receivable of last year is removed. And in the same adjustment, you can see in the debit side, 15,000 is received for the next year. It is not receivable for current year. It is received in advance in current year. So again, 15,000 is minus. I repeat, this is received in current year, but it is for last year. So removed. This is also received in current year, but it is received for the next year. So removed. Received in advance of last year, not given. Now we will close these accounts, and now we can come to the conclusion. Let's find out the subscription net income, how much it is. So 1,17,500 plus 5,000 is 1,22,500, minus 500 is 1,22,000, minus 7,000 is 1,15,000, and minus 15,000 is 1 lakh. Let's check it again. 1,17,000 plus 5,000, 122,500 minus 500, 1,22,000 minus 7,000, 1,15,000 minus 15,000 is 1 lakh. So the 1 lakh amount is the income for current year. Income, credit all incomes and gains. Now we will go to the income and expenditure account, credit side, where we will record subscription working note number 1, rupees 1 lakh. This working note can be given here also in the inner column. It is your choice, either give it in the inner column or give the reference and give it in the working note. As per your convenience, you can go for it. The format is given to you. Now coming to the end of the solution, closing down all the accounts, that is income and expenditure account will give us net profit, that is surplus, or loss, that is deficit. It will be transferred to capital fund, and ideally the balance sheet should be tallied to give you 100% marks. So let's go for closing the income and expenditure account now. So before closing the books of account, there is one adjustment, rather one effect is left, that is talking about the subscription. Let's go to the adjustment of subscription now. As we have seen, receivable of current year is already recorded second effect in the asset side, but received in advance in current year 15,000 is our liability. Anything received in advance is our liability. Make sure that you have given the second effect in the liability side. As you can see, this is the second effect, subscription received in advance 15,000, it's a liability. Now, after giving all these effects, closing the books of account, come to the income and expenditure account now, where income side total is 2,50,000, while the expense side total is lesser. The balancing figure is 1,08,000 surplus. In P&L account, we call it as net profit. Here it is surplus. Now this statement is over and surplus will be added in the capital fund in the balance sheet. So let's move towards the balance sheet liability side. Capital fund 2,16,000 plus donation, life membership fees, add surplus 1,08,000. So total outer column 4,04,000. Now nothing is left. All the liabilities are recorded as well as asset. Make the total 626,500 is the tally figure of assets and liabilities after getting all the items recorded, and this is a complete solution and we got full marks for this. So in this way we have solved the board examination question and we have got it perfectly tallied. Step 1 was make the posting of RP account, give single effect in IE or balance sheet. Second, give two effects of all the adjustment. I repeat, subscription can be given as a working note internally or separately, but don't forget to give the second effects. When all the second effects are given, income and expenditure is closed, we got surplus transferred to balance sheet and we got it perfectly tallied. This was a perfect solution for the board examination question. So that was all about NPO, non-profit making organizations and their final account. The topic becomes extremely important because it has been asked for 12 marks in the examination with no options. So obviously it becomes an important thing. But more than that, if you understand the concepts perfectly, if you love the topic, you will of course get these 12 marks and the knowledge also. So revise the topic again and again, solve many questions as possible and secure your 12 marks in the examination. Thank you.